Welcome to SmithWeekly discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. Up front, we want to thank our audience for questions coming from @Feeds Explorers, Cindy W., Mike P., and Todd A. We have Craig Parry on the line today. Craig is President, CEO, and Director of IsoEnergy Limited. ISO is listed on the Toronto Venture Exchange under symbol ISO. Craig, thanks for coming on.
Thanks for having me, Andrew.
So, Craig, give us your background and then tell us about your past successes and failures.
Well, unfortunately, there's more failures than successes, but we've had a couple of successes that we can talk about. So my background, look, I'm an exploration geologist. I spent 9 years with Rio Tinto in various different locations. I kicked off in the Pilbara looking for iron ore and diamonds down there in that great Pilbara iron ore province of Australia. Spent a couple of years in Chile, a couple of years in China, the usual sort of Rio Tinto thing, and then had a global exploration role looking for, project generation for iron ore. Before leaving to start a number of my own companies with a few partners. Some of your listeners might be familiar with Owen Hegarty, who was one of my partners at the Tigers Realm group of companies. Owen built Oxiana from 2000 up to 2006 from a $10 million market capitalization up to a $6 billion market cap during that last resource boom. In that Tigers Realm group of companies where I was a partner with Owen, we started a number of companies, a few things listed here in Canada on the TSX. My main baby there was Tigers Realm Coal, where we built a tier one coking coal asset and mine out in Far Eastern Russia, of all places. And then one of the other things that I helped start at that time and co-founded was Nexgen Energy with Lee Courier, who is the CEO of Nexgen. Lee's also my chairman at IsoEnergy. And we were very fortunate there to make a discovery, the Arrow deposit in the Athabasca Basin. And we started that company. We did the initial capital raise in that company at 5 cents, and it's now trading around $3 a share. So that's been a tremendous win for investors. So that's one of the things. I'm also involved and a shareholder and co-founder of a company called EMR Capital, which is now, I think, the second biggest private equity fund in the world for resources. We've got about $2 billion under management there at EMR Capital, so that's gone very well. Some of the failures, well, there's plenty of those. Tigers Realm Coal was, I think we did well there to acquire a number of assets in Far Eastern Russia that were really tier one in nature. But of course, unfortunately, with the Ukrainian situation in Russia, it became very difficult to raise capital and advance that project as quickly as we can. So I think, shareholders are still suffering there a little bit, but we hope that'll turn around one day soon. And then, out of Nexgen Energy, I should say, we spun out IsoEnergy. That was in Nexgen. We had a bunch of properties out in the eastern Athabasca in some very, very good targets. Of course, our shareholders at Nexgen wanted us to focus on that Arrow deposit, advancing that Arrow deposit. So we thought it made sense to move those assets out into IsoEnergy, staff the company up, fund the company, and give those projects the attention they deserved in a different group. We've also, I can come back to that a little bit about the ISO strategy and the reason we spun it out of Nexgen. But what that means is that, we've got the full might of Nexgen there behind us. Nexgen's now got $1 billion market capitalization. We've got $130 million in the bank. So, having that expertise, experience, and financial might behind us is very good for our company at IsoEnergy as well.
Right. Okay. Well, before we get into ISO a little bit more, and of course there are a little bit of discussion points with Nexgen, EMR. What's EMR focused on right now in natural resources? What is EMR looking at?
Yeah. So look at EMR. That we've got. I should say that I'm a shareholder and helped start the company. I'm no longer formally involved on a day-to-day basis. I lend a bit of casual advice, of course, and still involved to that extent. But EMR, tremendous success there. Jason Cheng, the CEO, Owen Hegarty, the executive chairman, Tony Manini, who was one of my partners at Tigers Realm as well. Tony is an investment director there. Those guys have now got two funds, Fund 1 and Fund 2, about, as I say, 2 billion Canadian or Aussie under management. I think, at some point you'll see Fund 3 start as well. And the focus there is more very much advanced stage or operating assets, bigger types of projects, of course. So as an example, we had the Matabe gold project in Indonesia, which we sold recently for, I think, about 1.2 billion. The guys have recently bought Kestrel coking coal mine in Australia off Rio Tinto for 2.2 billion. So much bigger transactions, much bigger, projects there. The focus is very much for those guys on the key commodities we really know and love, and that is copper, gold, to a lesser extent, potash and coking coal. One of the things the fund hasn't invested in really is uranium, for whatever reason. Really, I think their concern there has been timeline and lead times to production for most projects around the world, which is sort of telling and leads into a bit of discussion about what we're seeing on that front. But EMR has been a tremendous success.
Right, and certainly interesting, and also whether or not, given the situation in the uranium industry, the supply-demand fundamentals, the coming out of a bear cycle, it'd be interesting to see what the folks at EMR now are starting to think about the potential value proposition that exists. So tell us a bit about ISO, the share structure, management, compensation, cash on hand, and what are the key projects?
Yeah, absolutely. So look, we've only really been around since 2016, and that means we haven't got too many shares out at the moment. We've got 55 million shares out. Nexgen is the biggest shareholder with 59% at the moment. We've done a number of transactions with some of the other major uranium players, including Cameco and Areva, and JCU, the Japanese uranium conglomerate. So we see those guys heavily on the register as well. So Cameco's there with 7%, Orano, or formerly called Areva, the French giant, there with 3%, and JCU with a couple of percent. We're in a very fortunate position and quite a good day to be speaking to you, Andrew, in that we've just in the process of closing a financing. Cormark and brought to us a bought deal for $4.5 million. I think we'll probably close on $5.5 million at some point in the next few days. So that sees us very well funded. We'll have about $7 million in the bank come the new year. And that allows us to focus on our key projects out in the eastern Athabasca. Compensation and that side of things, I should say, we run a pretty lean shop here. The 4 full-time employees that we've got in ISO are all exploration geologists, myself included. So we, on that basis, there isn't much that goes into administrative costs in that sense. Everyone's a boots on the ground type geologist, and thereby, spending a lot of time on the actual exploration work. So that we think is a real bonus and a benefit for shareholders, that we're all focused on the exploration programs that we're doing. And then just on the projects, so look, as I say, Eastern Athabasca focused, and as you know well, Andrew, if you want quality projects, you've got to go where there are quality deposits, and certainly that Eastern Athabasca, it produces all of Canada's uranium at the moment. It's the point, it's the area of the world where there are the highest grade uranium deposits. The major mines out there owned by Cameco, being the Cartha River and Cigar Lake, their head grades are typically around 20% uranium, which is 2 orders of magnitude greater than a number of the other mines around the world. So, astonishing grade, huge projects in that sense. MacArthur, until it closed recently, was the biggest uranium mine in the world. MacArthur produced 13% of the world's uranium. So MacArthur alone was the equivalent of Saudi Arabia in oil terms. So, there's so much exploration potential out there. And one of the things that we're doing, so, if you a little bit of geology, the Athabasca Basin, it's a sandstone basin, sits above an unconformity, as they say in geological terms, and below that you've got the basement rock. Now these deposits, MacArthur and Cigar Lake, for example, sit at the unconformity and in the sandstone, and the alteration in those deposits can be very, very intense. And so it means that the rocks are very weakly consolidated, often having a consistency like toothpaste or sort of wet concrete. And that means that, the mining costs associated with those deposits are really very, very high. And hence you've seen the closure of MacArthur River. What we've found at Arrow is a very different beast. It sits down in the basement, in that coarse, competent crystalline basement rock. And what that means is that deposit lends itself to conventional low-cost underground mining. And it turns out, historically, the exploration model for these deposits has been that you don't get deposits of the Arrow size down in the basement. Well, we've now turned that theory on its head and proven that, I think at Nexgen there we've got a resource of 360 million pounds of uranium in a basement-hosted deposit. Now that's a very big deposit. So those things, it turns out, are the best things to have, the best things to look for. You see Nexgen's PEA, we've got an MPV on that project at $50 uranium price of about $3.5 billion. So it turns out they're the jewels in the crown of the Athabasca Basin. That's what you've got to go after. And lo and behold, the eastern Athabasca, probably the most prospective part of the world for uranium deposits, has never, ever been effectively and systematically explored for that type of mineralisation. So at ISO, our strategy is very, very simple. Explore the properties that we acquired from Nexgen for that type of mineralisation, and also put our foot on as much of the eastern Athabasca as we can and start drilling below the basement into the structures that host those Arrow-type deposits. To my mind, there will almost certainly be other Arrow-type deposits worth, millions of dollars in that eastern Athabasca. They just haven't been looked for yet. So our strategy is so very simple, just to do that.
Okay, so give folks just kind of a picture in their mind of where Arrow is in relation to, say, a Cigar Lake in terms of distance, and also where the properties of ISO are in relation to these locations.
Sure. So the eastern Athabasca, if you go about 600 kilometres north of Saskatoon, the capital of Saskatchewan, and I should say, in Saskatchewan, that's the place to be exploring as well. It consistently ranks in the Fraser Institute survey of exploration managers and mining companies in the top 1 or 2 jurisdictions in the world. They're used to uranium mines being built there. You've got all of the infrastructure expertise and governmental support to develop a project out there. So a great place to explore in that sense. So we're out in the eastern part of the Athabasca. Some of our projects, for example, Thorburn Lake is only 6 kilometres away from that giant Cigar Lake mine. Nexgen's on the southwestern part of the basin, a couple of 100 kilometres to the southwest, not far from the Alberta border. That's fast becoming a new sort of eastern Athabasca equivalent, if you like, largely driven by the team at Nexgen and what they've discovered in Arrow. Very big deposit. Not as much infrastructure, but you've still got power and roads and things in that part of the world. So it's still a great place to be exploring and finding and developing projects.
Okay. Well, so with Nexgen kind of having a large bulk of the shares, what's the methods behind that, and how will Nexgen monetize those shares? Is this something that's kind of planned to be, sold in a monetizing kind of a positive uranium price environment moving forward?
Yeah, good question. I look at the strategy there. And I should say, sort of in the interest of full disclosure, I'm on the board of Nexgen. Lee Courier, the CEO of Nexgen's my chairman here. We've got a number of board members in common across the two companies, so we have a good idea of what's going on between the two companies. I suppose I'd say to you that Nexgen's not really doing any exploration out in the eastern Athabasca, so that's left to us, I suppose, as a majority owned associated company in that sense. But our strategy there is to we've built the team here at ISO. We're actively out there exploring, of course, with Nexgen there maintaining a very solid position. I should say also that Nexgen's participated substantially in the last couple of capital raises we've done, including this one that we're working on at the moment. Nexgen's putting in 1.5 million into that deal. So, our intention there is to keep Nexgen there as a major shareholder. And I think probably, what we're hearing from Nexgen, Cameco and others on the register is that, they're happy with their shareholding. No one's selling, none of the corporates are selling. And that is because if we make a discovery, as we appear to be on the verge of, then, they're already well positioned should they want to buy more stock in the company or take the company over at some point in time. So I suppose it's all about positioning in the story.
Sure, yeah, absolutely, and I'm sure Nexgen knows the methods in which they'll do what they need to do in a uranium price environment of $65 or $70 uranium and so forth. So with that, the companies obviously share efficiencies in management. So there's obviously some joint use between the companies of the management and probably facilities and so forth. And you just said that Nexgen supports in a private placement type deal. Does Nexgen support financially directly, or is it only in participating in private placement type deals?
No, look, it's all arm's length and only participating in private placement type deals. So there's a very clear distinction and demarcation there on that front.
Okay. So Craig, you're involved with Nexgen, as you said, and you know it really well. Realistically, what is the true time frame for permitting, community outreach, infrastructure, construction, commissioning, and finally, actually canning cake?
Sure. Look, I'd recommend that you get Lee Courier, the CEO of Nexgen, or Travis McPherson, the head of corporate development there on the show and have a chat to them about that, because it's I can give you my sort of high level overview, and I think we're working on that timeline in the company now. But what I would say to you is that there's a couple of sort of key things. Firstly, Nexgen's project is very straightforward and modest sized mine. The cash flows will be extraordinary. It'll be one of the highest margin mines ever built. But from a very modest mine. So, the environmental impacts of that mine will be very minor. So that it's got a lot of pluses that we think will allow it to be permitted a lot faster than anyone expects. I think, also what we're seeing, that project, if you look at the pre-feasibility study that Lee put out there a few weeks ago, it will throw off about $3 billion in royalties and direct taxes to the Saskatchewan government over a 9-year mine life, and about $1.5 billion in royalties to the federal government. So, of course, and Saskatchewan's economy is a little bit depressed at the moment. You've seen Cameco close McArthur River and retrench a bunch of people. The potash businesses there in Saskatchewan aren't going so well. So they've got a number of challenges, and they are really very, very keen, both the Saskatchewan government and the federal government, to encourage further development and job creation and growth in Saskatchewan. So, people are highly motivated to help us advance our project, is what I would say to you. Okay.
Yeah, that sounds good. Well, on that topic, Nexgen, I'm not familiar. I haven't looked at it recently with the pre-feasibility study there. What is all-in costs there for the mine?
All-in cost, I think the cash cost under the pre-feasibility study will be about around US $4 a pound. The all-in sustaining numbers around $12 a pound. and the total number with a return on capital, I think with a discount rate of 10%, is about $17 a pound. So it's an extraordinary deposit. It's like nothing else I've ever seen. Certainly something that I think, a Rio Tinto or a BHP would be proud to have. It will do the most extraordinary thing, and that is occupy the first quartile of the cost curve at a cash cost of about a quarter of the next best mine. So it's a disruptive deposit in that sense. It's a bit of a freak of nature.
And the study was done at a base case of 50 pound uranium.
Yeah, that's right. That's right, Andrew. Okay. And I think we'll see that long-term contracts over the next year or two, we'll start seeing those get signed at north of that sort of level.
Right.
In large part because of the closure of McArthur River, of course. And
right.
Our understanding is that, Cameco needs a uranium price much higher than $50 a pound to bring that back on stream. So the world will be in deficit until contracts start getting written at those sorts of prices. So hence we use that number.
Right. So the Nexgen journey has been mostly written so far during the downside of the last uranium cycle. Do you believe that it's extra difficult to realize full value during discovery phases when you are in an extended torture period like what we've seen post-Fukushima?
Yeah, excellent question. I think, certainly if we'd discovered Arrow during that last boom, Nexgen would be sort of probably a $10 billion plus company. We saw examples of that during that last boom. So, you can do so much better when you get a positive market. But the extraordinary thing about that is, and I like to sort of talk to people about it from the standpoint that the very first capital raise we did in Nexgen was at 5 cents a share. I think that was back in 2011, 12, late 2011, early 2012. So that was post-Fukushima, post the flooding of that nuclear plant that was caused by that tsunami. And of course, that had a really serious impact on uranium prices and has put us in that downward trend for the past 6 years. So, despite making that discovery, starting the company, making the discovery post-Fukushima, we've still managed to take that, turn those investors' dollars, take them from 5 cents a share up to about $3. I think we hit as high as $4.20 or thereabouts a couple of years ago. So, that's key to what we're doing, and why, people ask us, well, why would you be exploring for uranium in this horrible downturn? Well, firstly, we're contrarian. Secondly, we're not doing anything else. We don't do anything else. This is our business. We're in it for life. But thirdly, despite this downturn, a discovery in the Athabasca Basin can really deliver extraordinary returns for investors, as the guys have done there at Nexgen.
Right. Well, it'll be interesting and entertaining to see how this plays out as we get underway with this new cycle. So you've been around in the Athabasca Basin for some time, and of course lots of other places. But in this region, what company do you kind of have respect for or like in this area that is kind of in a respectable situation?
Yeah, well, there are a few of them. Of course, Nexgen's doing something that I think is absolutely extraordinary. You go out to site, and the guys there, the way they operate, I think is actually sort of best in class, and certainly, as good, if not considerably better than some of the the majors operate. So, that project's in such good hands. I think, there are a number of other players, of course, Cameco, on the eastern Athabasca with their mines and mills and projects do a tremendous job. I think, unfortunately, they're struggling a little bit at the moment with some of the issues around the cost base of those projects, but they do a fantastic job there, and such a wonderful company to support Saskatchewan the way they do. Then we see some other guys out there. I caught up with Jordan Trimble from Sky Harbour yesterday. He continues to impress me greatly. He's got some really good looking projects out there and doing some exciting stuff there. So there's a few around. Denison, of course. I should say, so Steve Blower, my Vice President of Exploration here, Steve came to us from Denison, where he was the head of exploration, and he led the team that discovered Denison's Griffin ore body, which is another one of these examples, rare examples of basement-hosted mineralisation. I think, Denison does a very good job as well. They've got some really good projects and an interest in a mill. But outside of that, that's, you start to struggle to come up with names. And I think, for investors, that has some serious ramifications, implications in that, when you look at the space and look as to where you're going to put your money, there aren't many people that you can put it into. So I guess one of the very few benefits of this downturn that we've gone through, the sort of length and depth of it, has meant that there's been a natural filtering process occur. And
right.
and so now there aren't many of us left, and the ones that are there are serious and have managed to survive.
Right. Well, you're an Australian, and I know you have a presence globally, and I know you look beyond just Canada, and even in some cases the U.S. I'm sure you're looking at home country and other places as well. So along the same lines, what if you can't share businesses, what are some respectable people in the industry that you've come across globally? What kind of names do you respect across the industry that have made their mark and have a good set of wisdom and experience?
Yeah, good question. Look, there are some really good operators out there. I spent a little bit of time in London with Daniel Major. Daniel runs Goviex. Those projects, permitted projects in Africa that could be brought on stream very quickly. He's doing a fantastic job and got some good looking stuff there, I think. Who else can I talk about? Down in the US, I think, there are a few good operators. George Glazier at Western Uranium, very, very impressive. The guys at Energy Fuels do a great job, of course. And I think, for your listeners, that's probably pretty important with this Section 232 petition for uranium that was brought forward by Energy Fuels. They could stand to be a tremendous beneficiary of a decision, a positive decision on that 232 petition. There's a few guys, but again, you sort of struggle to find too many names out there. I think the companies, serious uranium companies left in the world at the moment, there's only about 30 of us. As opposed to, a few years ago, there was probably 300 listed uranium companies. The other thing about that is that, of course, the combined market capitalisation of our sector nowadays is only about $15 billion. Pre-Fukushima, it was over 130 billion. So, for investors, the beta potential, the sort of total market potential is probably 5 times their money. That again, as an investor myself, the way I look at it is, you don't have to spend too much time thinking about picking actual names and stocks. Just buy a basket of them all, because as the market starts to move up, as uranium prices return to the norm, the tide will lift all boats.
Right, and the combined market cap of the industry is really similarly close to one company in the cannabis sector, Canopy Growth, on the TSX.
Yep.
So it's interesting to put such a small industry in perspective and how such a big impact it has on the nuclear power industry. So moving on, so you're part of management over at Skeena Resources. How are things going over there, and give investors an idea of kind of how you split up your time between these companies?
Yeah, sure. Look, I'm not on the management team there. I'm just on the board at Skeena, and so that doesn't take up too much of my time at all, really. And Walt, the management team there, led by Walter Coles, are doing a tremendous job. So thankfully, I get to be just a board member but a very happy board member, I should say. You know, Walt's got some, he's done a tremendous job of bringing on board, firstly, that SNP project. SNP was one of the highest grade and highest margin gold mines in the world. And then, of course, he did the deal to bring on board Eskay Creek, which, you know, was, I think, for many years, the highest margin mine in the world. You know, Barrick and its predecessors produced of the order of 3.5 million ounces there at somewhere around a head grade of 46 grams per tonne, or 1.5 ounces per tonne gold equivalent. So, you know, that's a fantastic deposit, and there's so much left there. Of course, the challenge at both SNP and Eskay going back 20 years ago was the lack of infrastructure and access meant that the cut-off grades that were employed at those mines were very, very high. I think the cut-off grade at SNP, for example, was about 20 grams per tonne gold. Nowadays, all the infrastructure's caught up. At both mines, you've got roads within a few kilometres. You've got a run-of-river hydroelectric plant that's there that can provide power, and good road access all throughout there now. So, you know, when it comes to redeveloping those mines, the cut-off grades will be that much lower. So, you know, they're spectacular projects. That's one of the weird anomalies in the market at the moment. I think Skeena, to my mind, is one of the best investment opportunities out there. It's a market cap today is about 35 million. I think, you know, in a normal market, it should be worth a couple of $100 million. But just because of the sort of, you know, gold price and issues going on at the moment in the resource space, the guys aren't being awarded for what they've achieved there just yet. But that'll change.
And thanks for correcting me. I said management in my ignorance. So switching gears just a little bit. So what do you see as the backbreaker catalyst to lift uranium off the ground over the next 12 to 24 months?
Yeah, look, I think, you know, there are a couple of things that are going on at the moment, that are playing out at the moment, that we've been predicting for a long time. But like anything, these things take a little bit longer than you expect to have happen. So, you know, as an industry, we've been predicting, and I should say, you know, you've got supply and you've got demand. And on the demand side, you know, I don't profess to know too much about that aspect of things. You know, when as miners, explorers, developers and miners, we're usually supply side tragics, but we don't have the greatest of visibility through to the demand side. But what we do know is that post Fukushima, you know, we saw demand dwindle considerably. A couple of things have happened on that front. You know, 2 months ago, we saw global demand finally reach pre-Fukushima levels. We know that China's very quickly developing a much larger nuclear fleet. And so demand side growth continues steadily at more or less 2% year on year. So that's okay. That's looking after itself. But really the whole story, to my mind, is on the supply side. You know, if you direct your listeners to our website, you'll see on our company presentation we put in a cost curve there. Now, the cost curve in the uranium sector is a little bit of a tricky thing, and you know, there's a fair amount of BS that goes into that cost curve as well. And one of the things that we haven't gone through as an industry, as a sector within the mining industry, is a move to quoting all-in sustaining numbers. The gold industry, of course, 10 years ago went through that pain, and now everyone understands all-in sustaining numbers as opposed to cash costs, give a much better view of the picture. Uranium, we don't do that very effectively at all. But what we do know from recent experience is that costs of production are much higher than what people are sort of really talking about. And hence you've seen some dramatic things happening on the supply side. So you've seen Kazatomprom close 30% of their production or reduce their production by 30%. Cameco has shut their US operations. They then shut Eagle Point, and then they shut McArthur River, which was of course the biggest news of all. So all of that pain that we had to happen on the supply side, we're finally seeing play out, and in a really dramatic fashion, and it's happened very, very quickly. The other thing though that we hadn't predicted was that, you know, for every action there's an equal and opposite reaction. What we found is that with Cameco closing MacArthur, they still have long-term supply agreements with their customers, particularly those in the US. And so they've had to wade into the market and buy physical product. And that's what's driven, in large part, we think, driven the price rise from about $18 a pound to $29 a pound today. Cameco disclosed on their most recent quarterly call, they need to buy 2 million pounds this year, still to do this year. And then next year, it's of the order of 14 or 15 million pounds that they need to buy to replace that or to feed product into that long-term contract. So, that we would expect that will continue to have a fairly dramatic impact on the market. And then the other thing that's happened on the demand side is the emergence of a number of financial entities that are looking to invest in the space. We saw the Yellowcake Fund established in London. They raised $200 million. What's little known at the moment is that come 1st of January, they've got the right to buy another $100 million worth of product off Kazatomprom. My understanding is that they'll be raising that money and buying that product. So, all of a sudden, they're with those closures, you're seeing these new pockets of demand. And so, I think,
right.
And a lot of that buying will be in the spot market. So we reckon there is sort of huge upward pressure emerging to drive the spot price up over the next 6 to 12 months.
Right, and certainly the supply choking that's occurred and these purchases by these holding funds coming into the market and Cameco stepping into the spot market is all good stuff. And of course another big adder to it is just the timing of long-term contracts that are coming due and need to be redone over the next couple of years. And then of course the Section 232 adds a nice little pop to what's going to potentially happen in 2019, 2020. So moving on Section 232, what is your view on Section 232, and will Canadian-based producers be a part of the potential deal there?
Yeah, look, I think that's an interesting one. I reckon it was a good move to put forward by Energy Fuels and Jeff Klender at URE. I think, to me it makes sense that you want to have a strong degree of energy security in your country, and of course I think 80% of, or maybe even more, 90% of the uranium used in the US is supplied from outside the country, and about 40 or 50% of that comes from former Soviet Union states. So less than ideal situation there. So to me it makes sense, and I think my prediction is that potentially even for political reasons, because of course there's sort of a lot of talk about the Clintons and their sort of position in that situation. It's probably another opportunity for Trump to sort of sink the slippers into Hillary and Bill. So there's a political element to it as well. So, but I think commercially it makes great sense, and so I think you'll see that go through. I don't know about Trump and Trudeau don't seem to have the best of relationships at the moment. So whether Canada gets to be part of that party, I'm not so sure. I sort of wouldn't expect it. Possibly Australia. I think Australia's actually sort of got a much stronger relationship with the US, and we saw with the aluminium and steel tariff situation, Australia was given a free pass there. So, but for Canada, not so sure. To me, it would make sense to include them because, of course, that the Athabasca Basin is not too far away from Montana, and but it'll be interesting to see. I think of course, what happens when the decision's handed down by the Department of Commerce to Trump, he's then got 90 days to sign off on it. If it goes through as I expect it would, then we potentially end up with a two-tier pricing system. It won't have a big impact on overseas pricing or prices external to the US, but what it will have is a dramatic impact on an increase on the price that's achieved by US producers. So, very positive down there.
Yeah, no, there'll be some interesting points coming out of this, and see there's no better circumstances that are lining up with the protectionist administration, the folks that are running these agencies. There's kind of no better. It's a really good situation that's set up, and with Cameco and the infrastructure that Cameco has, and the capacity of the U.S. with almost no fuel cycle infrastructure at this point, it'll be interesting to see how they manage to get this off the ground, and how you're going to have some serious capital capex going into the U.S. in order to start meeting some of these minimum quotas that have been asked for. So it'll be interesting. It'll be an interesting couple of years coming ahead here.
Absolutely.
So on another subject, do you see SMR technology being kind of the direction of the nuclear power industry in the coming decades?
Look, I think longer term, absolutely. Will it have an impact in the next 5-10 years? It will start to, but certainly it makes sense to my mind. I think the safety rating of these things, they're very stable, safe things nowadays. I think sometimes people sort of probably concerned about going down that route, but as I mentioned, I had quite a bit of experience in building a coal mine in Far Eastern Russia, and one of the things that we were looking at to provide power to that coal mine was acquiring in Russia there's a huge fleet of nuclear-powered icebreakers, and so we were looking at potentially acquiring one of these, parking that offshore and powering our mine from what is in essence a small modular reactor. So there actually is already precedent for use of, utilisation or deployment of those sorts of things. So to me it's a logical step, and certainly if I think California is an example that they want to move to zero carbon energy sources completely by 2040. To my mind, the only way you can get there is to employ nuclear technology, and SMRs make the most sense on that front.
Right. It'll be interesting to see if California can actually grow some brains and start to wise up. Yeah, so it's certainly interesting to look at these, and the technology is impressive. The safety factors are impressive. The money that's starting to come into it is impressive. The companies behind it is certainly interesting, and it's the fact that you can potentially build these things in a warehouse and ship them by surface roads or rail to the location, or by a boat, is really impressive. So it'll be interesting to see how the next 10 years, how that develops out, and maybe even in the near term, maybe in the next 5 years, we'll start to see some prototypes be deployed. So,
for sure.
What other natural resources sectors do you see having very strong fundamentals over the next couple of years?
Look, I've a couple of things. I think, again, this downturn has been so sort of long and deep that not a huge amount of development work and exploration have been done for a number of metals. But I really like copper. Copper's always there's always good, strong demand for that, growing demand, particularly with this increase in use of battery technology around the world. And the head grade of copper mines in the world has dropped dramatically over the last sort of decade. And so having a good copper project, you're always going to do well. The other sort of macro trend that I really like that we're looking at is the move to battery metals and more battery materials. One of the studies that we look to a fair bit is a Rio Tinto study that they commissioned MIT to do for them, to look at who will be the big beneficiaries of this battery EV revolution, but also including in that AI and robotics. And the surprising finding is that on a sort of semi-quantitative basis, tin is set to be the biggest beneficiary of all of that, because of course tin's used in solder, and the need for tin goes up dramatically. And of course, there's been no real exploration for tin for a very, very long time, and no developments, no projects sitting on the sidelines. So, I really like the outlook for tin. But lithium, cobalt, graphite, and then copper and nickel are also the big beneficiaries of that. What is, a transformatory fourth leg of the industrial revolution, if you like. So, we love the battery metal space. And uranium fits within that, of course, as well, because it provides the cleanest energy possible to feed into those batteries.
Good insights. Appreciate that. Certainly the value proposition with uranium at this point is by far pretty significant. So back to that kind of subject. Besides the U.S. and Canada, so you got to pick something else. What other one uranium jurisdiction do you like?
Good question. Australia's not too bad. Western Australia, of course, we've got some very good deposits there, although, we need much higher prices before those things become economic. But it seems that you can actually permit and develop a project there nowadays. I mentioned Daniel Major and Goviex there before. He's got some good projects in parts of Africa. Oddly enough, I think Nigeria is really quite interesting because of the grade of the deposits. They're tricky jurisdiction, of course, but not for the quality of the assets, it's almost worth going there, I think.
Okay, no, that sounds good. I figured you would say
Sorry,
Australia.
I think I said Nigeria. I meant Niger, but
yes, yeah. No, I was wondering about that. So thoughts on Namibia and its status?
Yeah, that's an interesting one because, of course, we saw Rio Tinto sell Rossing to a Chinese conglomerate there a couple of weeks ago. I think those projects are interesting. I think Rossing's probably been losing money for some time. They're incredibly low grade. They're the things I refer to. I think they produce uranium from deposits that are about 250 ppb. That's our cutoff grade in the Athabasca Basin. I think grade is everything when it comes to to developing a project that has a good margin. So I'm not the biggest fan of the Namibian deposits.
Okay, so what's up for ISO in 2019? So how will the money be used that you just raised? What specific targets will you be focused on? And give us an idea of how much you plan to expend in 2019.
Yeah, so the plan there, so we're in a very fortunate position now that we're very well funded for the next year to 2 years, just depending on what we find. Our major focus at the moment is on our Lock East property. So we did a deal with Cameco back in May. We immediately sent a drill rig out there. We had a drill rig drilling at our Geiger property, and we wanted to drill one hole there to meet some exploration expenditure commitments on that property. And we targeted our best target there, and lo and behold, the team did very well and hit a significant mineralised intercept there, discovery of a new high-grade zone. We drilled 8.5 metres at about 1.3% uranium. So, people like to talk in gold equivalent terms. That's 8.5 metres at 22 grams per tonne gold equivalent at current prices. So, really, really strong intercept there. And that's our primary focus. We announced, put out a news release today talking about where we'll be drilling. We'll be doing some very modest step outs around there to see if we can't find out where that mineralisation's going and its extent. So I think, people can expect some very good news from us as we kick off the drilling. I think we'll be drilling come the 10th of January, and then that'll go on for 6 weeks or so. One of the great things about exploring for uranium is you get a couple of kicks of good news releases when you hit mineralisation, because of course you get your scintillometer results as soon as the core comes out of the ground, and then you get your assays 4 to 6 weeks further down the road. So there'll be good strong news flow coming out of that project. And then beyond that, we've got the other thing about the Eastern Athabasca Basin is that during that last boom in 2007, a huge amount of money was raised, and a lot of that went into drill holes in the eastern Athabasca. But unfortunately, with the Fukushima incident, the money dried up. So what that meant was that a lot of companies have done the first or second round of drilling, typically just the first round of drilling, hit mineralisation, and then haven't been able to afford to follow that up. And so, we're one of the first companies to come back in this new part of the cycle and be funded to allow us to go and firstly acquire that ground and secondly go in and follow up those drill holes. So we'll be doing more of that. We've got I think there are 5 mineralised intercepts on the Geiger property that have never been followed up that have tremendous potential. So one of the things that allows us to sort of have what we talk about is high impact exploration. We're not doing all of that initial time intensive, capital intensive exploration work. We're simply getting in and following up existing drill holes where mineralised intercepts have been made, and any one of those could very quickly turn into a discovery, as we're seeing at our Hurricane Zone on the Rock East.
Okay. And is there any JV carry with Cameco or Rano at this point?
No, look, we don't. We've managed to do some really very neat, clean deals with those guys, whereby we've bought 100% of our projects from them, including Geiger and LaRock, for shares. And one of the great advantages and few advantages of this downturn has been that people have been willing to do deals at very reasonable prices. So where we've made that Hurricane Zone discovery on the Rock East, we acquired that project off Cameco for $300,000 worth of shares and $20,000 in cash back in May. So we're very well positioned on that front, and we don't have any of those cumbersome joint venture agreements and things that take up a lot of management time. Cameco and the other advantage is we get another major on the share register with a substantial shareholding.
Okay, so why should investors look at ISO now, and what would you say to those considering ISO at this point?
Look, we're a fairly rare commodity at the moment, a very active junior explorer. We're cheap. We've only got a $20 million market capitalisation. We've got projects out, in that eastern Athabasca, in what is an incredibly prospective part of the world. Huge number of walk-up drill targets that could at any moment turn into a discovery. But probably the most exciting thing is the fact that we'll be drilling some in and around that high-grade mineralised intercept come January, and so we should have some really good news flow out of that. We're all hopeful that turns into a significant discovery. There's all sorts of exploration risk in what we do, of course, but the risk-reward equation is right. The potential upside is absolutely enormous. Right,
and the timing right now, the context of time for these types of vehicles is timing-wise, it's a pretty good place to be right now. So, Craig, for those who want to learn more about ISO, where should they go?
They can visit the website, IsoEnergy.ca, so IsoEnergy.ca. That's probably the best way to get in touch with us. More than welcome to call the office as well. We're on 778-379-3211. But look out for some really good news flow over the next couple of months.
Craig, well, good luck, and we appreciate you taking the time.
Thanks for the time, Andrew. Really, really good to speak with you. I love some of your questions there.